All right. Good morning, everyone. So it's Friday. What day is it? It's Friday, the 13th of March, and it's almost 8 a.m. here in Sweden. So I just came down to my office, and I figured I'm just gonna hit the record, right? So I'm opening up TradingView here, and I'm gonna walk you through my whole process here in the morning. So the first thing I do is I go to Financial Juice. So it's financialjuice.com and just look at what upcoming news do we have for the day. As we can see here, we have GDP numbers coming out from the EU area. We got Canadian unemployment rate at 130. We got GDP coming out of the US. And we have US core PCE at 130. Now, I'm not really trading or making decisions based on these events, right? Because I'm a swing trader and I'm a trend following trader looking at the higher time frames. These events aren't really going to affect my trading too much. There might be one thing that's good to know here is the fact that we have at 130 we have the US core PCE, right? And that is, we got a 130 PCE, and then at 3 we have US jobs, jobs opening, right? And we also have the Canadian unemployment rate. So some of these events, there are events that can definitely move the markets quite heavily. So the way I look at it is, if I'm looking to enter a trade and the time is, 1, then I might wait that extra 30 minutes to see how the markets react to the news, because I might get a better entry on the volatility coming from that event, and that event might also be a catalyst for more confirmation of an idea that I'm watching. So if the news event turns out to be a positive catalyst for a trade, so for example, let's say I'm looking to enter a trade on a break and retest of a support level, and then the break and retest happens, and then the event comes out and you have a bullish candle, bullish price action, bullish momentum coming in based on that event, and that would be a catalyst that confirms the trade. So it just adds a little bit more conviction, and I might actually be able to add a little bit more to that trade based on that positive catalyst. So I look at the news events and I go through the feed here to just scan through it to try to get an understanding of what's going on out there. So just going through this, and especially this one, the Asian market wrap, I'm just getting a feeling that the market is overnight, it's been a bit indecisive, right? And then what I do is I go to Bloomberg. So I go to bloomberg.com. I have a subscription here, and what I do is I simply just go through the homepage here to just get a pulse on what's happening. So we're seeing here that we got headlines of stocks selling off into the weekend as oil rally ebbs, and we have US Treasury gives green light for sale of more Russian oil. And the important thing I'm looking at is like major developments. And from what I see right now, there's nothing that's causing me to think that today should not be a trading day or something like that. Just to make sure I'm up to date on whatever's happening out there. Just a quick glance, right? I'm not doing any research or anything like that. Just keeping myself updated. And during my whole day, so during my whole trading day, I'm always checking Bloomberg Live on YouTube, right? So I'm not sure if this is the one, but they have, you know, on Bloomberg YouTube. So I always have on one screen, I always have Bloomberg live, because honestly I feel it's like it's great. They have great coverage whenever there's something major breaking. And yeah, just for reference, this is the one I'm looking at, Bloomberg live right here. So I got this on my left screen when I'm trading, when I'm working, whatever. I always have this up to be able to just get a feeling for what's going on out there. All right, and here we are back at the charts. Now, one thing I want to mention here when it comes to, you know, macro fundamental analysis or whatever, you know, me scanning through the markets and everything. Now I would say a technical analyst at heart. My main priority in my trading and analysis is technical analysis. But there's also one very important thing to understand about trading and technical analysis is that technical analysis will give you it will answer the question of when and how price is moving, but it's not going to answer the why, right? So if you think in terms of cause and effect, then fundamental analysis will be the cause of the effect and price will be the effect. So when you're doing fundamental analysis, you're analyzing the cause of price moving. And then when you're doing technical analysis, you're analyzing the effect of the cause. Now, there is this thing called fusion analysis. And fusion analysis, and this is something we talk a lot about in my CMT studies, especially now in CMT level 3, we talk a lot about fusion analysis and how we should confirm how price needs to confirm the fundamentals, right? And how fundamentals should confirm price. But the way you want to look at it is you have a fundamental event or you have something happening. Now, in this trade right here, AUD NCD, this is a beautiful example. I'm going to show you two examples. So we have first AUD NCD. Now, what's the fundamentals here? Well, the fundamentals here is that there's a rate differential between AUD and NCD, where the Australian Central Bank were looking at hiking the interest rates, which of course then brings AUD higher, while New Zealand Central Bank were looking at lowering interest rates, which keeps the New Zealand dollar weaker. And you can see the correlation here is just perfect. So you have that fundamental backdrop, and it's quite simple. You know, it's just central bank policy and interest rate decisions. And that, from a fundamental point of view, should have brought AUD higher versus NCD. And price very much confirmed it. We have on the weekly, we get that break at above that high. And then we have a beautiful break and retest on the daily. That's where I entered. And now, as a trend following trader, a massive mistake by exiting here too early. There's no reason to exit a trend while the trend is active. But here is a good, that's a good idea of fusion analysis by using fundamentals, just looking at rate differentials and price action. Very simple stuff. And then there's the third component, which is sentiment analysis. Now, there's something that I believe might not be as important in the Forex market, but when trading risk assets, we're looking at the stock indices or individual stocks, Bitcoin, and risk assets like that. Then at that point, sentiment analysis becomes important, and that's kind of like the holy grail of trading and investing, understanding the relationship between price, fundamentals, and sentiment. Because price is really what it is. It's fundamentals plus sentiment creates a value that's reflected in price. Anyway, moving on. So that's AUD NZD. And another example where the price did not confirm the fundamentals is on USD JPY. Now, I wasn't really meant to go into this conversation. Well, now we're here. So, remember, if you guys remember when I was working for the prop firm called The Fivers, I was doing live streams with Dirk and LJ. and Dirk and LJ, especially LJ. Now he's fantastic when it comes to Forex fundamental analysis, and he talked about how at this stage, right? So summer of last year, we talked about how USD JPY should be trading lower, right? And we had big banks and major analysts talking about how USD JPY should be trading lower. And the reason for that was the relationship between the way that the Japanese central bank were doing their policy decisions and how the whole carry trade was potentially unwinding. But and that seemed like a very solid idea from a fundamental point of view, but price is never confirmed it. Prices kept going higher, but fundamentals said lower. So, you know, I was calling for higher prices just because of the technicals, but the fundamentals were not in alignment on that. So would I be following the trend? Yes, and I did. But if the fundamentals agreed on price, then I would probably have increased risk on that. And if price, and this was actually the bigger trade that I was looking for, I wanted to short USD JPY down to this level. So if price would have fell down here while fundamentals confirmed it, I would have shorted this with quite a lot of risk to the downside, right? And that's why when I went long on AUD NCD, I didn't enter this trade with 1% risk like I normally do. I entered this one with 2.5, right? Because everything agreed, fundamentals and price and everything. All right, so the video is already a little bit too long, so I'm just going to end it here and say thank you so much for your time and thank you so much for watching. I will make sure to keep uploading these short videos for you guys on a more consistent basis. Keep the comments coming, keep the questions coming. I do have a list of questions from you guys that I'm going to go through in future videos. All right, that's it for me. Take care.